So, like any other business, forex trading has its own costs. Unfortunately, many people are not aware of these costs. For many people, they think it's just a matter of depositing your money, trading, and then getting your money out, and that's it. In a way, that's true because most of these costs, if you are a successful trader and you are making money, you sometimes don't even realize that there are these costs to trading. So in this video, we are just going to talk about some of the costs that are associated with trading and maybe possible ways where you can reduce some of these costs, especially if you are one of those people who is always watching the balance, who is always watching the cash flow. Like you're business minded, you want to know how much you put in, how much you made, how much you put out, efficiencies. If you're like that, and then this video is also for you and also for people generally. Because, like I said, many people they just assume that it's a matter of just depositing your money and trading and taking your money out. And sometimes they don't even realize that there are many costs to trading. Before getting to that, if you are new on this channel, please consider subscribing so that you don't miss any future. Like the video. If I don't entertain you for the next few minutes, I hope that I've given you something to think of. So the least that you can do for me is to just go ahead and like the if you are looking to download stuff, Forex Robot, does books and stuff like that, there are also links in the description box below. You visit those links and see if you not find what you are looking for. The broker that I use, they are one of the best brokers in the world. You can start trading a real life account with them for just $5, which makes them good for when you are not sure and you want to test a new strategy, a new system. You can deposit $5, you get a real life trading account. Then you can test your robots, your strategies, everything without putting too much capital on the line first. Then obviously, if your strategy or your robot is profitable, then you can put in the rest of your capital. So sign up with the link in the description box below. So getting back to the issue of hidden costs associated with trading. There are broadly two categories of expenses that are associated with trading. The first category, let's say this is obligatory, it's unavoidable. The moment you deposit your money and the moment you start trading, you cannot afford this cost. Then the second category definitely would be optional cost. So let's not take long on this video. I don't want to be the whole day. So the first, we are going to look at the first category of costs that you cannot run away from. You cannot run away from this one. The first one will be spread. A spread is the difference between the ask and the bid price. When you are looking at your chart, you will see there are two lines, the ask price as well as the bid price. The difference between the ask and the bid price is actually the spread, and that's actually a fee that the broker will be charging you for buying or selling an asset, and it covers the broker's own expenditures on a transaction. When you place a buy, when you place a sell, the broker they are facilitating this process. So they also need money to cover that transaction that they've covered for you, linking you and the market. So brokers charge what's called spread, and spread differs between brokers and it differs between currency pairs even within the same broker. For example, you'll find that spread is wider, especially on exotic pairs, and it's tighter on major pairs like US dollar versus Japanese yen, euro versus dollar, GBP, USD, and so on. A rule of thumb, and this is a tip for you to avoid paying too much on spread. The rule of thumb is usually when a forex pair receives liquidity and volume, more liquidity and volume during the day, their spread tends to be tighter. But forex pairs that see limited volume or limited movement of demand, whatever you call it, trading during the day, their spread is usually wider. So that's a tip that you can actually use if you want to reduce the amount that you'll be paying on spread. Then you want to seek out the pairs that move. Those are the pairs that you want to look for. Then you definitely also want to minimize scalping strategies as well as hedging strategies and so on. That's finding ways to minimize the amount that you end up paying for spread. But spread, everybody pays it. It's a matter of fact. I know there are some brokers who say they offer zero spread and stuff like that, but they charge you in other ways. But for most brokers, spread is a fact of life. So that's the first cost of trading that you cannot avoid. The second cost of trading that you cannot avoid is actually slippage. What is slippage? Have you ever seen that sometimes when you are trading a news announcement, sometimes let's say you place your trade at 1,000, the broker only enters your position at 1,200. Have you ever seen that? Have you ever seen a situation where you place your trade maybe at 500, but the broker only places your position at 530? That's what's called slippage. And it's a fact of life as well in trading. The problem is that if you are trading the lower time frames and you are trying to catch a quick move, slippage can easily put you on the wrong level, on the wrong, you take your position at an unfavorable position. Your entry is entered at an unfavorable price. Let's put it that way. So in the end, you actually, if things actually turn against you, where you really wanted to buy it or sell it, and where the broker eventually placed your position, and things turn against you, that's a cost. So yeah, that's another given in trading, especially when you're trading volatile news. There's a high chance that you'll be caught up in slippage. It also comes linked with something called recording. So sometimes if the slippage is worse, the broker will actually ask you if you want a record. A record is basically you wanted to enter at 1,000, but price has moved so far away from 1,000. Would you consider placing your trade at 1.5? Then you then decide whether you want it or you don't want it. That's a record. So that's another cost to trading. And sometimes it happens and people don't even realize that they are being slipped and that they are being recorded. Some brokers don't even ask you whether you want to be recorded or whether. So those that's another cost that's actually associated with what? With trading. The only way to avoid slippage is usually to avoid volatile news announcements at least an hour or an hour after. Then you might also want to trade higher time frames, let's say 1 hour time frame and higher. Usually you don't see slippage in those candles because they're higher time frames. but usually on the 1 minute, 5 minute, 15 minute, you will see a slippage. Okay, then the next cost that you cannot avoid when you are trading, especially if you're a swing trader or you hold your trade somewhat overnight, is swap. There are differences. You might actually make money. There's what's called positive swap with some currencies, depending on whether they are going up or whether they are going down, or negative swap. Negative swap is where the broker actually charges you for holding that position overnight. Then, in the instance of positive swap, that's where the broker actually pays you a little amount for holding that position overnight. It depends on a currency. When you go into the currencies, when you look at them, you just go through the specifics of that currency. You will notice that some currencies they offer positive swap, so you actually make money on the swap. But most of the time, you actually get charged swap. So one way to avoid swap, if you want to avoid swap, is never to hold positions overnight. And if you're going to hold your positions overnight, then make sure that it's worth it. Make sure that it's worth it after the swap and the spread has been deducted. You are still making money with that position. Then the where are we now? Number 4. There is also a fee for withdrawals. Most brokers, most brokers will actually charge you a fee for withdrawals. It's a fact of life, which is why you just not need to make sure that when you are withdrawing your money, you are actually having enough so that it makes business sense. Don't just withdraw $10 here, $20 there, $50 there. It needs to make a business sense. So, because some of the brokers they are going to charge you what? They're going to charge you a withdrawal fee. Some they don't, and for that they actually charge you commission. The brokers they always have ways to recoup the money somewhere. So some they don't actually charge you a withdrawal fee, but they will actually charge you commissions. Commissions are basically every trade that you make, the broker will charge you a commission, uh, which is also like if you find the brokers, there are brokers that will charge you commission on trade. So when you buy, the broker already charges you commission. When you close that trade, they charge you commission. When you sell and sort, they charge you commission when you buy, when you sell. And you find that most of the time those brokers their spread is low because instead of making money on spread, they are actually making money on commission. So their spread will be lower, but sometimes you actually pay more on commission. Then you find that because the broker is not making money on commissions, they charge you a little bit more on spread. So the brokers they always find ways to recover their money and remain profitable. Then number 4 or number 5, zero activity fees. Many people don't even realize that they are being charged when you leave your account idle, when you are not trading and your account is just idle. It's a real account. They don't charge you on demo. When it's a real account, a live account, and it's just sitting there, it's not trading, it's not doing anything, you will get charged as zero activity fees. It depends with the broker. Sometimes if you leave your account inactive maybe for 1 or 2 or 3 months, the broker will start charging you zero activity fees. Sometimes they wait for up to 6 months, sometimes they wait up to a year. If you don't place a trade for up to a year, they start charging you these zero activity fees. Okay, then a big one, importantly, a big cost to trading that many people don't even realize is also taxes. yes, you need to pay your taxes. Whether you're a trader or whatever you do, you need to pay your taxes. Uh, there are ways though where you can actually limit or reduce the amount of tax that you actually end up paying. But there's a scenario where sometimes your broker is also registered as a tax agency. So if your broker is a tax agent, usually your broker also deducts tax. They also deduct tax on your trading. The amounts that you are making from your trading, the broker already takes a chunk of that profit as tax according to the laws where they are operating from. Then, when they send you the money, let's say you are living in another different country, yes, sorry about that. Say you are living in a different country, as usually we are. The country where you are living in also wants you to pay tax on that income. So you kind of get taxed twice. So there are ways where you can try to avoid this double taxation. Some countries do have agreements where they try to solve this double taxation issue. Some countries don't have this in place, so sometimes you actually get taxed twice. So the other usual trick when it comes to reducing your tax bill wherever you are is usually to trade as a business. There are brokers that offer like corporate trading accounts, not the usual individual ones. So you actually register as a business, so you'll be trading as a business, and everything that you will be making in your trading comes a business cost, including the costs that you'll be incurring during your trading. Those are deductible as business costs. So, as a scenario, in many jurisdictions, you find that if you earn, let's say, $100, for argument's sake, let's say $100, you find that as an individual, you earn $100, the government comes in and takes $10 out of that $100 as their portion of tax. This is just theoretical, and they give you the $90 to go and live your life and pay your bills. But in all these jurisdictions, you find that a company that makes the same $100, the government says to this company, how much did you put in expenditure in cost into this $100? And they will only what deduct their tax on the profit. So if a company can prove that they had cost of $90, the cost of $90, and they only made $10 profit, the government is going to come, using the same example, only remove 10% of the $10, which is a dollar. So as an individual, you usually pay more tax than if you are a small business or a CCLLC, whatever might be applying in your country. So usually it's a good idea to trade as a business to deal with the cost of taxation. So those are some of the hard to avoid costs when it comes to trading. You cannot avoid those ones. Then we look at optional expenditures. Well, these you can simply avoid. For example, whether you want to use a nice computer, a high-speed internet, good software, a VPS saver, these are good to have if you have finances, because a good computer, well, it makes your trading pleasurable, and like you, if it's a fast machine, you don't like your MetaTrader 4 is crashing all the time. You are frustrated and stuff like that. And if you have money, you can get a VPS saver for what 24-hour trading, especially if you're in a country where the power is usually their usual blackouts because the government cannot supply enough power. So you can use a VPS server where you can basically trade without interruption because it's in the cloud. And more especially if you are trading with a robot, you can use a VPS server. Then obviously, if you cannot afford a laptop, maybe you can use your phone with whatever. So, but these are optional. You don't necessarily need these signals and mentors. That's another cost. If you're going to be using signal services or using some mentor or buying a robot, uh, these are optional fees, but they are costs to trading. They can accumulate as costs to your trading, and basically will determine your bottom line whether you actually made money or you did not make as much money as you thought you were making. Then I think did I leave anything out? I think that's basically it for this video. So there are costs to trading. Many people don't even realize that they are paying these costs, but they are costs to trade. So find ways to minimize some of these costs if you are facing some of these costs, because at the end of the day, you might think you are making so much money when you are actually not making as much money as you thought you are, because you are not approaching this with a business sense. Okay, so again, subscribe if you're not yet subscribed. Like this video. Until next time, bye.